Hello and welcome. This is the Market Trap. I'm Agam Vakil. Well, we're live right now, and before we start and take a look at the markets, let's also take a look at Wipro. The IT majors' earnings are out right now, and the numbers, while they're looking largely in line, there's been a little bit of a miss when it comes to the top line, as you can see here. Pardon me. So we do have the net income, of course, is, when it comes to profitability at 2,400 crores. Just a tad ahead of expectations of around 2,300 crores. And in terms of revenues, while revenues stand around 14,720 odd rupees against expectations of 14,840 odd rupees, there's been a little bit of a miss. But I'm also told that the EBIT margins for IT services revenues have seen an improvement. And as you can see, the net income has been higher by as much as 3% in comparison to estimates. Now, when it comes to Wipro, there are a bunch of things that we were watching out for. The reason why we have seen this decline in revenues is largely on account of the fact that the company has divested one of its units, Workday. And of course, while this was on anticipated lines, the other aspect that we were working with was the decline in margins. Why? Higher visa costs, wage hikes, which is a part of seasonality for the entire sector for that matter, and the stronger Indian rupee against the US dollar, which has also worked against the margins. And that's possibly the reason why we have seen this decline come through for Wipro. The other aspect we are also keeping an eye on is how the banking financial vertical has done, and yes, as to what sort of growth it's seen, because we're getting mixed cues from the likes of TCS and Infosys. So while Infosys has actually seen growth, TCS actually saw a decline, and Accenture painted a completely different picture. So that'll be one important factor to watch, and the other one will be healthcare as well as healthcare as well as communications. So that's something that we'll be watching out for as well. Now, moving on, of course, besides that, we will also be watching out for the total contract value, which should be up on your screen in just a few moments. And of course, the total contract value will be very important because we have seen that kind of momentum in the entire sector over the previous few quarters. And on that note, actually, let's get in our voice here. We do have Dipesh Mehta, who looks at the sector very closely, to talk to us about that. Dipesh, hi, thanks for joining in. Tell us, what have you made of the numbers? What's your initial take?
Yeah, so broadly, I think I haven't gone through the numbers in detail. But prima facie, looking at the overall number, it seems to be broadly in line kind of number. EBIT margin is slightly higher, but it might have implication of the lease accounting change which happened.
Okay, Dipesh, just hold on. I also have Trip Chaudhary on the line, who looks at the space very closely. Trip, thanks for joining in. What is your take on Wipro? Largely in line with your expectations?
Yes, it is. It is in line. I think the industry sector as a whole is recovering, and Wipro will be a beneficiary of that.
Okay, Trip. So in that case, what have you made of the kind of deal flows that the big 3 or 4 companies are seeing in the sector, and how would you compare that to Wipro?
I think they are almost in line because in few quarters, certain companies get different quantities of deals. So I think generally, there is a good tailwind in all of the bigger IT services companies in India.
All right, Trip. The other question is, while we are looking at that seasonality playing out as far as margins are concerned with wage hikes and visa costs coming into play, in the long run, when it comes to the rest of the financial sector, are there any more concerns that may impact profitability in margins in this case for the sector?
I think it is very important for the companies to focus on the long term. That is, they need to continue to invest in their own businesses and grow the top line. I think margin should not be the focus in near term because Wipro will need to continue to reinvest in their own employees so that their capabilities are in line with what the work is being expected from them. So a few years back, there was a capability mismatch between what capabilities IT services companies had and what deals were coming through. So I think right now investing in the people, making sure they are skilled in the new opportunities, that is cloud, machine learning, and other stuff, that becomes more important. So I think margin should not be the prime focus for the investors in near term.
Sure. In that case, Trip, well, it's an end of an era as Azim Premji steps down. From here on, what would you like to hear from the management of Wipro specifically with respect to the future?
I wouldn't say it's the end of the era. I think if you think about Premji had been really not at the helm for the last 4, 5, 6 years. So I wouldn't say it's symbolic in nature because he is well respected across the whole world. But I think Indian Wipro will continue to chug along. But I wouldn't say that's an issue at all.
Sure, Trip. We'd like to thank you for joining us and giving us your initial take on Wipro. Of course, we'll be watching out for some of those factors, but I'm told we still have Dipesh with us. So, Dipesh, if you've had some time to go through the numbers, your take now, you have suggested that largely they're looking largely in line. What's the view here? Anything that stands out for you in the fine print?
No, I think company has yet to upload some of the documents on exchanges, but broadly the number which we have so far, number seems to be broadly in line with expectation. And for incremental detail, I think we have to wait for some time.
All right, Dipesh, we'll get back to you on that one then. Thanks so much for joining us and giving us your initial take as well. So there you have it. Wipro, well, the numbers are largely in line according to both the experts that we've spoken about. And for now, it does seem that because of the fact that profitability is higher, and we've also seen a little bit of an improvement in margins, EBIT margins specifically for IT services, well, that may bode well for the company.